I think it's time to do a little update on crypto and what's been going on in the market and what you need to watch out for next. So let's go ahead and take a look at the Bitcoin graph, and we could see that there's been lots of pain in the crypto sector. And I know that Bitcoin isn't all crypto, but it's such an interconnected ecosystem that looking at this will generally tell you how the rest of the marketplace is doing. And I know there's lots of small coins that erupt every now and then, but we're not going to talk about that. We're going to talk about the ecosystem as a whole, and to do that, I think Bitcoin is definitely the best thing to look at, as I think the consensus is anyways. But moving past that, we can see that there's been a lot of pain here. And for the crypto market in general, remember, this used to be a $3 trillion marketplace that's now dropped by 2/3 to just over $1 trillion. And that could definitely be reflected in Bitcoin. If we actually range out here and we go to a longer time frame to, let's say, the 1 day here, we can see how rough this is getting. But we can also see that Bitcoin used to sit about the 8,000 level. There's some people saying that we'll have a return to this. If you've been watching my other content, I've been pretty consistent saying that I think 16,000 will be the bottom, and then I readjusted that to saying that I'm expecting it to be 12,000. And we actually had that confirmed by our local portfolio manager in the Discord, Joe, who put up this Elliott wave chart where he expects the bottom to actually be at the 12,000 to 9,000. So pretty interesting. So far, we've been riding consensus. As you can see, he even predicted a bounce up to 26,000. If we go back to this trading view chart, we can see let's go back to the 4-hour here. We can see how we kind of almost bounced up to that at the 24,500 mark. Of course, Elliott waves are not a science. They're more of an art, and he's a pretty good artist, if I don't say so myself. So far, we've been in line. But when you're thinking about this, you have to think, okay, what caused this capitulation here? And the big picture here is that as the Fed continues to raise interest rates, easy money isn't so easy anymore. And as these companies over-leverage themselves, offering yields that were ridiculously high, as investors started to pull out wanting their money, they realized that they couldn't cover themselves, and we've seen bankruptcy after crash. It started with Celsius, then it hit Voyager. Then we saw the Lunaterra network crash. 3 Arrows went bankrupt. And actually, talking about 3 Arrows, it's now said that they've been ghosting everyone and they've been taking off. You know, when you run $10 billion hedge fund, it's easy to make $100 million disappear and take off with it. So it's been a mess. Lots of that we've already reported on, so I'm just kind of doing a quick breeze, especially since all that's in the past and we want to talk about what's next. But before we talk about what's next, I'd like to draw a correlation between what's happening now and what's happened in the past. And for that, let's go ahead and listen to everyone's favorite chicken, Mr. Doomberg, as he compares what's happening now in the crypto space to what happened back in 2008.
Interestingly, we are running the exact same experiment that we didn't run in 2008-09. And so what we're really seeing play out in the crypto space right now is a replay of the experiment that we intervened in and did not allow to happen in 2008-09. We're seeing massive contagion. We're seeing firms go belly up. We're seeing other firms that were tied to those firms or may have large exposure to them suddenly filing for bankruptcy. We're seeing massive pain on the part of consumers, which is unfortunate. But the medicine is being taken. And unlike in the global financial crisis, the full and violent forces of economic destruction, of creative destruction, are going to be allowed to play out.
There's a few key things here, because he's right. In 2008, when we had the giant crash, the government stepped in and bailed out the big banks and insurance companies. And they said that if they didn't do that, things would be so much worse. And really, we just have to take their word for that. Same thing happened when COVID. We got all this stimulus. And everyone kept saying, if we didn't do this, things would be much worse. And of course, when it comes to the COVID stimulus, we knew exactly what the consequences are when we look around at the inflation that's occurring today. But what we don't know is what could have happened. But we are constantly told that, oh, this is the better alternative. Just like in 2008, we were told, oh, the better alternative is to let all these bankers go, bail them out. Only one banker got jailed through that entire time period, even though there were so many fraudulent things going on and so much dirty finance occurring. But now we get to run the real experiment. What would happen if there was no government to step in and say, we're doing this for your good because you don't know better, and instead letting the natural order play out? And that's all fine and dandy, but the question then becomes, is the collapsing actually done? And I don't think it is. And that then brings to question the Tether network. With a market cap of almost 65 billion still, this company was tied to a lot of the bankruptcies and collapses that we've already seen occurring, and they keep saying that everything's fine, but once again, let's tune in with our favorite chicken to hear what he thinks.
So how can Tether claim to still have all the reserve assets that they claim if some of the money, the billions of dollars of the money they loaned to Celsius or Terra Luna or any of these others is gone? I mean, how can Tether still, with a straight face, hold a buck?
Until we have a full and complete audit by an accredited accounting firm, I don't think you should believe anything Tether says. They are like amazing. They claim to have 1-to-1 complete backing with thorough liquidity, and yet they're investing in risky assets that aren't liquid, like loans. And then, or, they have exposure to sketchy firms.
And there it is. To me, this is the big thing that we need to watch for still, and I still think the collapse is occurring. Every company said that they were doing fine until they went bankrupt or until they went belly up. And Tether, I think, is doing the same exact thing. There's tons of indications that this network is still in trouble and they aren't being honest about what's going on. Now, that's not really anything new. Even the Federal Reserve and the government are saying we're not in a recession when we are in a recession. This is just a very normal human tendency. However, when it comes to you, the investor, and what you're holding or where your interests are, if you're looking to buy a bottom, I think that this has yet to play out, and I think this is important to keep up with. And so this video is set up to be a great example. We have our set levels that we're looking for the lows. Now we want to identify the catalyst that we think will bring about those lows. So if you're looking for what the bottom will be for Bitcoin, having duality for both your technical analysis and fundamentals align is a great indication of that. Now, I'm not saying that we'll time the bottom perfectly for those who are following the Discord, but we will have an eye out. And even if we're late to it, like even if you're late to buy the dip after the dot-com bubble burst, you still did really well. If we wait until after the lows, wait for the confirmation, the price appreciation, you're still going to do well. There is no need to perfectly time that bottom, although as a trader, that's always what we're aiming for. And so all in all, this ecosystem is a mess. Even experts who do nothing but follow this closely are still confused because it's such a puzzle to try and put together, and it's really hard to follow. For me, I'm going to be looking for that news story where someone gets jailed for fraudulent activity in the crypto space. Someone major, one of these major owners or CEOs, they finally get jailed, or there's a headline that says it's over, the whole space is just a sham, this is all a joke. Because to me, it's not a joke. The technology is the technology. I still believe in Bitcoin. And when we're talking about the '08 and drawing that correlation, it's important to remember that that's actually when Bitcoin was founded, as a way to not allow that to happen again, as a way to get away from governments, to get away from the banks and the insurance companies that create these massive bubbles, that create these crises. And we're seeing what happens now today in real time when you don't have those funny money losers being bailed out by the government and suffering no consequences. Because this time, when the bad actors are getting blown out, they're actually gone. And so on the positive side, that actually seems like a pretty good thing to me. If you'd like to read more about Doomberg's article where he talks about this in detail, draw some more of those correlations, I'll link it down below to his Substack, which I think is a great resource for you to follow. And I'll also link the podcast that I got those clips from over at Wall Street Silver. And of course, I hope you enjoyed this video. Make sure you also check out the link down below for access to the Discord, where the conversation is always continuing. And hey, if you watched the video all the way to the end, thank you so much. Maybe leave a like, a comment, subscribe, ring that bell so you can get notifications for future videos, and I will see you on the next one.